Andrew Tate has built an entire empire on one single promise, that he's a financial Midas, that money flows to him no matter what he touches, and that if you're broke, it's a skill issue, a mindset problem. Proof you're still stuck in the matrix. And of course, the self-made top G prints cash on demand. Now here's what makes Tate different from every other wealth guru. Most of them you can't check. The Lambos are rented, the bank statement's cropped, the portfolio is a screenshot. But Tate's actual trading wallet is sitting on a public blockchain, tracked in real time by anyone with an internet connection. And it tells us an interesting story. So today I'm going to walk you through a couple of things hiding in that data. A six-figure black hole where his money went to die, over 100 liquidations, and a token he launched himself, promised to hold on forever, and then dumped on his own followers. The question underneath all of this is simple. Is Andrew Tate a deliberate grifter running a playbook, or just a gambler who believed in his own marketing? My name is DC, and you're watching The Coin Bureau. Now, before we look into his wallet, Bitcoin is sitting at roughly $61,600 as I record this video, down about 16% on the month. In fact, June 2026 was Bitcoin's worst month since June 2022, and US spot Bitcoin ETFs bled a record of $4.5 billion in a single month. On June 6 alone, over 254,000 traders got liquidated, with losses topping $1 billion across the market. So in other words, this was one of the most punishing environments of the entire year to be running leverage. Any experienced trader de-risks into that kind of carnage. Tate, as you'll see, did the exact opposite. Which brings us to the persona he's selling, because you have to understand the pitch before you can appreciate the punchline. The whole Tate brand rests on the idea that traditional work is for what he calls poor beta. Escape the matrix, follow the top G, and money takes care of itself. When he launched his Memecoin last year, his promotional line was pure exclusion. Something along the lines of, imagine thinking you have any net worth while owning 0 of my token. Fast track your wallet to $1 million, follow me, get rich. It's a fantasy sold to young men who desperately want to believe it. And normally, this is where the story ends, because there's no way to audit a guru. Except this time, there is, because Tate chose to trade on hyperliquid. And for those unfamiliar, hyperliquid is a decentralized exchange where everything happens on-chain. Put simply, there is no private brokerage account hiding the damage. So every deposit, every trade, every liquidation is written to a public ledger forever. And his wallet got de-anonymized, and on-chain trackers like LookOnChain and Arkham have been following it ever since. So for the first time, we don't have to take a wealth guru's word for anything. We can just confirm what did or didn't happen. Now, before we crack those receipts open, a very quick word. Keeping up with the broader environment, regulation, on-chain stories like this one, that is a full-time job. So if you want our team pinning the news, the on-chain alpha, the market moves that actually matter as they land, come and join the Coin Bureau Telegram channel. The link's in the description below, and the QR code's on your screen right now. Right. Back to the wallet. Let's start with the headline numbers, because they are brutal. Across his trading history, Tate has been liquidated more than 108 times. His win rate sits around 35%. To put that in plain terms, roughly 2 out of every 3 trades he opens end in a loss. One snapshot pegged it at 29 winning trades out of 80. Cumulative losses across the wallet land somewhere between $800,000 and $900,000, depending on how you count. But here's the single most damning figure in this entire story. Over $727,000 has been deposited into that account. And the amount he's ever withdrawn? 0. Not a single cent was taken off the table. Every dollar that walked in either grew for a moment or bled straight into the market. Now, you might assume that confirms his Bugatti is not rented. Yes, but there's a bigger problem here. Analysts have a name for this pattern. It's called gambler's ruin. You deposit, you blow up. You reload, you blow up again, and you never ever bank a win. The clearest illustration of that loop happened just last month. On June 17th, Tate deposited $100,000 into the account. He immediately opened a 40x leverage long on Bitcoin. That's 57.36 BTC, a notional position worth around $3.76 million of 100 grand of actual capital. Now here's the mechanic that matters. At 40x leverage, a move of just 1.25% to 2.5% against you wipes the entire position, meaning Bitcoin only has to twitch a few $100s in the wrong direction and it's over. As price slid towards his liquidation level, he tried to save it. And this is the detail that tells you everything. Against a position worth millions, he topped up his collateral by $72.11. 72 quid against a multi-million-dollar bet. That's the financial equivalent of bailing out a sinking ship with a teaspoon. It failed, obviously. The long got liquidated, and instead of stepping back, he panic flipped, opening a 40x short worth around $1 million in the opposite direction. And of course, that got liquidated too as the volatility kept whipping. 8 separate liquidations in under 24 hours. His 100 grand became about $14,000, roughly 86K gone in a single day. And here's the thing, this wasn't a one-off bad session, which brings us to the deeper question. Why does this keep happening? Because a 35% win rate over 100+ liquidations isn't bad luck. It's a system, and it's a system built to self-destruct. Now, there are 4 behaviors that show up again and again in the data. The first is leverage itself. 40x on Bitcoin leaves you virtually no margin for error. So completely ordinary market noise, the kind that happens every single day, becomes an account-ending event. The second is averaging into losers. When a trade moves against him, the disciplined play is to cut it and live to fight another day. Instead, the pattern shows him pouring more and more collateral into positions that are already sinking. That $72 top-up is the comedy version. The tragedy version played out back in November 2025 when a single 40x Bitcoin long got liquidated for a reported $235,000 loss. The third behavior is panic flipping. Long gets liquidated, so he immediately slams into a short. Short gets liquidated, so he flips back. Analysts call this revenge trading, an emotional scramble to win the money back instantly rather than stopping to think. It almost always mistimes the market. And the fourth is that reload cycle I already covered. No withdrawals, no risk taken off the table, just deposit after deposit feeding the fire. Stack those 4 together and you get one of the most liquidated wallets on the entire platform. In fact, over one stretch in November 2025, reports at the time suggested he was among the most frequently liquidated traders on the entire platform. And this is where it almost gets poetic. The crypto community noticed. Some traders reportedly started joking about tracking his wallet just to bet against him. An unofficial inverse Tate, if you like. The top G became so reliably wrong that his own positions could be read as a signal to do the exact opposite. Now, in fairness, Tate is a huge name, which is why this spiked attention in the crypto community. But he's definitely not the only high-profile trader to blow up on hyperliquid. The leaderboards are littered with them. The same transparency that exposes him would expose plenty of others who talk a big game. And the man was trading into a genuinely savage market, one where hundreds of thousands of leveraged punters got wiped in single sessions. But that's exactly the point. Everyone else who got flattened wasn't simultaneously selling courses on how to get rich. They weren't telling millions of young men that money bends to their will. But Andrew Tate was. And that gap between the persona and the ledger is where this stops being a bad trading story and becomes something far worse. Because if the trading were the whole story, you could file it under ego and move on. But the tokens are where the mask slips completely. In June 2024, Tate got behind a Solana meme coin launched as a rival to another celebrity token. It ripped. At its peak, it reached a market cap somewhere in the region of $275 to $300 million. And Tate's promise to holders was absolute. He said he'd never sell, only burn and buy. He put it on the record publicly, pledging that he would never ever sell what was sent to his wallet. Diamond hands. Now, here's what the on-chain analysis found. Firms mapping the wallets reported that insiders controlled somewhere between 30 and 40% of the entire supply before the public promotion even started. Roughly 40% of the token was reportedly sent to Tate's own wallet shortly after launch. At the peak, insiders were sitting on over $45 million in value. So while the crowd was being told to hold with diamond hands, the people at the top were holding a third of the float they'd accumulated before the hype machine ever fired up. That token is now down more than 97% from its high. Over 2,000 wallets exited between August and November of last year. The retail crowd got flattened. And you might think this is the end of the hypocrisy, but it isn't, because just weeks ago in July 2026, it happened again, only faster and more brazen. Tate had a second token, this one carrying his own name. Same pledge, diamond hands, hold, burn, never sell. Then on-chain trackers caught a wallet linked to him swapping roughly 650 million tokens, about 65% of the total supply, through a Solana exchange. The take from dumping the majority of his own token, around $23,000. 23 grand. That's pocket change against the scale of losses he inflicted on the people who trusted the pledge. The token created around 95% of the back of it. The self-branded money genius rug pulled his own community for what one analyst called a rounding error. He's reportedly promoted over 10 Solana meme coins in a short span, starting in mid-2024, with most of them, tokens like Roost and Top G, crashing anywhere from 75% to 90% after his endorsement. So the pattern here isn't hard to figure out anymore. The interesting part is that two things are true at the same time and both of them are damning. On one hand, Andrew Tate is a genuinely terrible trader. A 35% win rate, 108 plus liquidations, $750,000 deposited and nothing withdrawn. That's definitely not a man who makes money on everything he touches. But on the other hand, he's an extremely effective salesman of the opposite story. And the tokens prove the salesman knows exactly what he's doing. You don't accidentally accumulate a third of a supply before you promote it. You don't randomly dump 65% of your holdings the week after preaching diamond hands. So the real lesson here isn't about Tate at all. It's about the machine that destroyed him, because it destroys ordinary people every single day. Leverage plus ego equals liquidation. Tate had the ego turned up to maximum, the need to publicly win, to never be seen cutting a loss, to prove the top G persona in real time. And that need is precisely what stops a trader from doing the one thing that keeps them alive: cutting the bad trade. Regulatory studies on leveraged retail trading have found that a large majority, often cited at 70 to 90% of those traders, lose money. The only real difference between them and Tate is that their wipeouts aren't sitting on a public blockchain for the world to laugh at. So if you take away one thing from this video, take this. The moment your trade becomes about being right instead of being disciplined, you've already started the countdown to your own $72 top-up. Check your liquidation level before you enter, not after. Size so that a normal day in the market can't end your account. And when a position is wrong, take the loss off the table while it's still small enough to survive. That's the boring stuff the top G persona can never sell you, because there's no course in "I cut my loss and moved on." But this is the difference between people who survive the market and people who become another liquidation statistic. And that's the whole point of what we do here. We don't deal in hype, we don't deal in fear, we deal in what the data actually shows. So here's the question I want to leave you with. Is Andrew Tate a deliberate grifter? Someone who mapped the inside accumulation, mapped the diamond hands pledge and dumped on his followers with full intent? Or is he just a gambler who believes his own marketing so completely that he leveraged himself to 40x and let his ego liquidate him in public? Because right now, the exact same wallet data supports both readings. So let me know which of those you think it is. And if you want to understand how these Memecoin launches are engineered to extract maximum liquidity from retail investors from the very first block, then definitely check out our full breakdown right over here. Thank you all so much for watching, and I'll see you again very soon. This is DC signing off.